Hey everyone, appreciate you all being here at USA Crypto Group for this AMA session. Today we have a project called The Collective. The Collective is a reflection token for passive income with plans in place to bring values to its investors. With that, I'd like to welcome Pickles from the team. Great to have you here, Pickles. If you can start out introducing yourself, talk about your team, and give us a bit insight on your background and experience.
Hi, everyone. Thank you so much for having me. I've been in this group now for a little bit. I've at least been having conversations with Seattle and Mike for a little bit now. And so I'm really honored that you guys brought me on here, and I'm really excited to talk about this project today. So I'm Pickles. I work for, which was formerly Titano Finance, but now is going to be Switch. The token and the decentralized exchange. Started off doing a lot of moderation work for them. And basically a few of us came together that were not on the core team of those projects and just had an idea of a way we could bring value to the DeFi community. Because we saw that DeFi was awesome and we really liked it. But there were a lot of issues in the space, especially with a lot of inflation, complex tokenomics, centralization, lack of transparency. You had projects that were making people millionaires overnight, but then were insolvent within a few weeks. So we kind of put our heads together and decided to try to create a project that solves some of these problems. So personally, I'm an attorney in the United States. And so the collective was my idea at the start, but obviously we had a lot of teamwork together to come up with everything. So I'm going to be handling most of the communication, AMAs, things like that for the team. We also have a few other guys on the team that are from the United States. And then we also have 2 European members, and then we have a member in Singapore, as well as a lot of just advisors that are crypto veterans in the space that work for massive projects, whether it's marketing, development work, etc. The multi-sig holders and the contract holders will all be outside of the United States. So I'm not on the multi-sig, and this is intentional because we don't want the United States to have jurisdiction over the project for the precise reason of the SEC sticking their nose in a lot of things and deeming them securities. And that's kind of how I actually started talking with Seattle and Mike. It was more along the lines of the issues of the SEC and deeming projects as security. So we thought the best way for us to proceed was to just moving the project outside of the United States. So that's the reason for that. But everybody on our team has worked closely with major DeFi projects across the space. Render, one guy on our team, is going to be on the multi-sig from Europe. He's probably currently works with 7 or 8 projects that are pretty big in the space. So we have a lot of experience, and so we're really excited to give this project a go.
Awesome, Pickles. Thanks for that introduction. Yeah, I always love the team that started out in the crypto space and kind of see, what's good, what's bad, and find ways to improve it. So I guess that takes you to this current token that you are doing right now. So at the core of it, it's a reflection token to give passive income. Correct there, Pickles?
Yeah. So the core is the reflection mechanism, and the reason why we're going with the reflection mechanism, that's not really anything new. There's reflection tokens out there, right? We saw a lot of rebase tokens that were really, really popular in late 2021, early 2022. And I love rebase tokens. I aped into a bunch of them, and some of them did really well, but almost all of them have had to change their model, or they went under pretty quickly because inflation got out of control. So the thing we like about the reflection model is, and especially with this one, is it's all volume based. So there's not this fixed 2% compounding interest that you're getting every day. Instead, if there's high volume days, you're going to get some of the redistribution of the taxes, but there's no new tokens being minted or introduced into the supply. And so also another downfall of rebase model is that on rebase models, in order for them to work, the liquidity pool has to rebase. So that's say it's a 1% rebase daily. Every day that's a 1% decrease in price on the liquidity pool by itself. Whereas in a reflection model, there's no reflections to the liquidity pool. So you don't get that negative price depreciation automatically in without even counting cells. So that's the reason why we're going with the reflection model. I know there's been a lot of reflection tokens, and there have been a lot that have failed, but we think what we're doing here is a little bit different compared to other reflection tokens.
Awesome. And we will go in depth on the different aspect of the project here. But for those that are listening right now, and if you are not sure what the reflection token is, to simplify it is pretty much you buy a token and you get distributed from the volume buy and sells in proportion to the amount of tokens you're holding. And it's all done automatically by the contract. Is that correct there, Pickles?
Yes, that's correct. And with our contract too, it's going to be a little bit more automated than general. So everyone will automatically receive their pro rata share of the reflections, which is the redistribution of taxes from buy and sell volume. Sells have a higher tax, and so there's more distribution of reflections to holders from sells than there are for buys. With our token specifically, though, everything will automatically occur on each transaction, which is a little bit different than other projects. So people might be in other projects that have a tax, for instance, and they'll see that in those projects, every maybe couple hours or maybe every couple of days, there'll be like a liquidity removal, or there'll be what people quote unquote call a contract sell. And so that's where if there's a tax where a portion of the tax might go to, like, say, the treasury or something like that, they're not collecting that in the native token. They're collecting that in BNB. So if there's the sale and you're selling the native token, how do they collect that BNB? It's from the liquidity pool. So what happens is you get these large red bars from these contract sales that have to occur after all of these sales aggregate over time. But what makes our contract a little bit more unique is that basically the impact of every transaction will happen immediately, and you won't have this aggregation of negative sell pressure occurring on the contract. So when someone does a big buy or sell, everyone immediately knows the impact on it with the price.
Awesome. Yeah, thanks for that explanation there. All right, so since we're on the topic of reflections, why don't we go straight into the tokenomics and we break down the taxes and where it all goes to.
Awesome. So we have, one of our core, pillars is simplicity here. And so, and this goes right into our tokenomics, because I personally think there's a lot of projects out there that will tell you, based on this mathematical equation that I created, not me, but I'm speaking for like if I was a different project, we can guarantee that if you invest $500 today, you're going to be a millionaire after 1 year. And then they have an entire page that looks like I'm taking an advanced calculus exam and explaining how everything works, but no one can really understand this tokenomics. And I think it's a little bit disingenuous, and I also think sometimes less is more. So we don't have any of those promises in ours because we don't think that's realistic. But we have a very simple tax system that is part of our tokenomics. So we have a 7% buy tax. 2.5% of that will be reflections. So 2.5% of that will be pro rata redistributed to all the holders. 3% will go to the treasury, 1% to the developer wallet, and 0.5% to the DAO wallet. And I'll explain what all of those wallets do in more detail. But I do want to make clear off the bat that none of those are team wallets. We don't have any team wallets. None of these are team payment wallets. These are all for the holders and for the protocol. And we can get into that more. But if you look on our website or in our documents, for instance, with the buy taxes, we have a chart, and it shows if you bought if you had $100 of BNB and you wanted to buy $100 worth of collective tokens, it shows the exact flow of money that will happen instantly with the contract, all automated. And like I said, you have the instant impact of that transaction. It's not taken out later, which can lead to unexpected price dips. And then with our sell taxes, after the initial cool down period, they're going to be capped at 12%. And then it'll be the same 3% to the treasury, 1% to the developer, and 0.5% to the DAO. But it'll be 7.5% reflections. So you'll have a much larger percent of the sell tax will be going to reflections. And the simple reason for that is if a whale decides to sell, the 7.5% of that sell is getting redistributed to everyone. So while when a whale sells, there's of course going to be a negative price impact, it's going to be somewhat buffered by increasing everyone's holdings, because 7.5% of his sell is going to get redistributed to all the holders on a pro rata basis. So it's just a way that I don't like the word anti-whale mechanism, because I don't think whales are necessarily bad. And I think that whales are very important because they typically are the ones that invested the most capital into projects. And I also don't think that, I think everyone wants to be a whale, right? So I think to say that whales are bad but we want to become something that's bad doesn't make any sense. So it is a way that when a whale does sell, it helps the holders out. But at the same time, I don't like calling it an anti-whale mechanism. So that's our buy and sell taxes, which are the more basic part of the tokenomics. But I also think it's important to go over the different wallets, because you hear that, for instance, with the sell, we have our reflections. So we've kind of gone over what reflections are. Then we have the 3% to the treasury. So the treasury is the protocol's wallet, and the treasury is used for marketing, pretty much everything that needs to be done to make this run. So gas, because the reflections are going to cost gas and BNB. So for gas costs, marketing, everything like that we need, that comes out of the treasury. The 1% developer wallet can essentially be seen as an arm of the treasury, but the developer wallet specifically is just earmarking funds for the development of future utilities, just so there's always some set aside. I know a lot of projects run through their treasuries with marketing, and I don't think that that's a good way to use a treasury fully. So we do want this earmarked portion of the developer wallet just to be earmarked for utilities and paying development costs. And then the 0.5% to the DAO wallet. So we're eventually going to become a full DAO, but we're also going to, before we get to that point, we want to have the DAO wallet as like somewhat of like a pilot program almost, so we can start to experiment on how we want this DAO to work. And I will say all of these wallets are going to be subject to a weekly audit. So there's going to be every transaction hash that came out of any of those wallets are going to be released on an Excel spreadsheet explaining exactly how they were used and where they went. And for pretty much any large expenditure out of the treasury, it's going to be up to a community vote, or the community is going to at least be aware of it beforehand, so there's not going to be any big surprises. And that's just another way for us to be transparent, because I've seen projects that have $10 million in a treasury and $2-3 million goes away and no one really knows where it went. And I don't like that. So for us, it's a way to explain this is what these funds are being used for, and we want the community's input on how we're using the funds. So
awesome.
that's,
sorry, go ahead. I was going to say you have a couple more wallets to talk about, right?
Yes. So now our newest wallet is, and I say newest because this is something we just kind of added in the past few weeks, is the staking rewards wallet. So 20% of the initial token supply is going to go to the staking rewards wallet. And how this is going to work is we're going to be launching on the Kenosphere launchpad. And I do want to talk about that protocol a little bit more. They're one of our main partners, but we're also going to be on the Switch decentralized exchange. So with both of those platforms, people are going to have opportunities to do staking or farming. And essentially, a lot of times with staking, rewards are paid out for minted tokens. But because we're not minting any more tokens in this, that money has to come from somewhere. So you can do BNB rewards from the treasury, or what we thought was a better idea is if we put 20% of the initial token supply into a wallet, it's going to receive reflections. And those reflections will be used to then pay people rewards that are staking. So they'll get their normal reflections while they're staking, but then they'll also get additional rewards. So these are for long-term holders that want to help take off some sell pressure off the protocol, stake their tokens in, and then get additional rewards. And because the circulating supply is going to be continuously going down, there will be tokens removed out of this staking rewards wallet so that it's always 20% of the circulating supply. And those tokens will be put into treasury, and we'll use those to fund secondary liquidity pools. So they won't be sold on the open market. They won't be going to team members or anything like that. They'll be used because our first liquidity pool is going to be BNB. But if people want to do, if the community decides, let's do a BUSD liquidity pool as well. Maybe we'll do some other Binance pegged BEP20 type liquidity pool because the exchange we're on is currently only BEP20. We use those tokens for that. So it's just a good way to have tokens set aside that can reward people for staking, and also we can use those to fund liquidity pools. And then our burn wallet is going to be 5% of the initial token supply. And how the burn wallet works is it will be receiving reflections as well. So with every transaction, a little bit of those reflections are going to go to the burn wallet, right? Because technically it's going to be a holder. Now it will be a dead wallet address. It's not going to be, because I've seen a lot of projects do this, and it's a huge red flag if any project does this. They have a burn wallet that's a live wallet address, and the team members get on there and say, we don't know what the keys are. We threw them away. That's a huge red flag. This is going to be a dead null address wallet. Once something goes into the burn wallet, it's gone forever. And it'll be, starting off, it'll be 5% of the total supply. So say there's a 10,000 token sale at the beginning, the first transaction, say it's a 10,000 token sale. Because there's a 7.5% reflection, 750 of those tokens would get redistributed to holders. Out of that 750, 37.5 of those tokens go to the burn wallet. Now say, because we've had high volume, the product's been going for a few months, the burn wallet's now 20% of the circulating supply, or the total supply. Now when there's a 10,000 token sale, and there you will still have the 750 tokens redistributed to holders, but instead of 37.5 going to the burn wallet, 150 of those tokens go to the burn wallet. So you can see how with every transaction, the burn wallet gets marginally bigger, and the burn wallet then since it has a marginally larger market share, it gets a marginally larger burn rate with every single transaction. And it's going to get to the point where the protocol is going to be very hyper deflationary. So tokens are going to be a lot more scarce than they are at the beginning. And I believe that is all of the wallets, at least all of the contract wallets. So I'm not sure if people want to ask questions on those specifically, or if we want to just keep going and wait till the end. It's completely up to you guys. It's doesn't matter to me. I'm used to litigating cases, and judges interrupt me in the middle of my arguments, so I don't mind. I don't mind questions throughout. It's more natural for me for that anyway. So whatever you guys want to do.
Okay, and I think I still see some questions in the room regarding the wallets. I think Mike's gonna read off that in a bit here after the AMA or whenever we're ready. But yeah, I love the idea of the staking wallet. I think that's a good idea. To fund the staking pool, earn the tokens to fund the pool there. Now the staking, will you have that live very soon? I mean, like when you guys launch the project there?
Yes. So with Kennelsphere, the staking will be ready on launch. With Switch, to be determined. I believe it should be ready, and that's just up to Switch. If anyone's familiar with that project, they're essentially migrating, and Switch is going to become. It's already a top 10 Binance Smart Chain DEX, but it has plans to becoming more probably top 3. And so it's going to have a lot of things. It's a perpetual DEX. So there's going to be spot trading as well as leverage trading and staking and farming. So once that's ready, which we're hoping it should be within the next few weeks, then if it's ready in the next few weeks, we'll have that on launch. But there's going to be 2 different sites to stake on. Kennelsphere will also get some staking rewards in BNB, I believe. And the Switch will probably just be in collective tokens. So we'll design it once we get the better idea of what both staking sites are going to pay, but you might get more collective tokens if you're on Switch, and if you're on Kennelsphere, you'll still get some collective tokens and staking rewards, but you might get a little bit of BNB too. So it might be a little bit less collective tokens. But that's all still fluid because we have to see what Switch decides to do with their staking.
I see. Now, on the Switch platform there, now you might have talked about it there, Pickles, but you are using the trading fees to also burn tokens, correct?
Yes. And I do know someone asked earlier, why are we choosing Switch instead of PancakeSwap? And 2 main reasons. And like I said, we're all about transparency here. So the first reason is I work with Switch already. I have a great relationship with the developers there. All of the core team members I have a great relationship with. And I think that's really important. And that's why they're listing, this is going to be one of the first projects listed on that decentralized exchange, because they know me and they trust me and my whole team. I think 4/5 of us all work for Switch. So that's one big reason. But the second big reason is I'm not sure how many of you have been in projects that are on PancakeSwap, but PancakeSwap and with any DEX, how they collect fees are, say you decide to buy, we'll use Collective as an example. So say Collective is on PancakeSwap and you decide to buy collective tokens on PancakeSwap. How a DEX works is it takes a very small, it's 0.25% of the transaction as a fee. And what they do is they take 0.125 in the trading pair. So in this case, it would be BNB. And then the other 0.125 in the native token, which would be the collective token. Then they aggregate a large amount of that native token. And when it gets to a certain dollar amount, they sell it on the open market. And it can really crush projects. When they did this with a rebasing token, it was really bad because they were getting 2% compounding interest, and they already had a huge amount of those tokens. So they were getting 2% compounding on top of their 10, 20, 30. I saw them do $200,000 sales on the open market because volume was so high on rebase tokens. It's even worse if they do this with the reflection token, because if they're taking all of these fees in the collective token on PancakeSwap, they're also going to be getting the reflections in their wallet. So they're going to have a massive amount of reflections coming in that aren't even fees. They're just getting them. Then they're going to sell it all in the open market. Switch gets rid of that problem. So what Switch does is it will burn the collective tokens that are taken as fees. So Switch still takes the same amount of fees. It's 0.25%, but the half that it takes in the native token, it burns, and then it just keeps the half it takes in the trading pair. So in this case, it will keep the BNB trading fees. It will burn the collective trading fees. So it's any project listing on Switch is going to be automatically deflationary, at least have that deflationary mechanism built in. And with our token, it just makes it more deflationary, and we don't have to worry about negative sell pressure just from a decentralized exchange. And that's always a threat with PancakeSwap. And quite frankly, it happens to any project that lists on PancakeSwap. Now, I'm not bashing PancakeSwap. They're the most successful DEX, especially Binance Smart Chain of all time. And they've made a lot of innovations in this space. I think they're a great platform, but they're not as friendly as Switch is. So that's the second and another very important reason why we're going to Switch and not PancakeSwap.
Wow, that's very interesting there, Pickles. I think that is actually really amazing because that becomes, the tokens become deflationary. Now, is this like a normal practice for their exchange? Or is that something that you work with the team and you guys set up a contract that does this just for you only?
No, it's actually for every listing on Switch. They want to be the most user friendly, the most holder friendly. So any token that's listed on Switch, they are doing the same thing. They're burning all the native tokens. Their launchpad also is only going to be a 1% launchpad fee. We're actually not using their launchpad, and I can get into that reason why later. But yeah, they're awesome. I love the guys behind it. Like I said, I work with them already, and I'm really excited to launch this project on Switch because it's so holder friendly, it's so project friendly that you get that, because trading fees really add up, and so it's a huge deflationary mechanism. And when you add that in with our burn wallet that's getting these constant reflections, we're starting off with our 1 billion tokens, right? But it's going to go down very quickly. Our supply is going to go down really fast. So your market share is always going to be increasing so long as you're holding.
Right. That's actually very unique. To be honest with you, I have not used Switch before, but that sounds very interesting.
It's awesome, man. For instance, I'm a cold storage guy, but my hot wallet, I like to use Trust Wallet more than MetaMask. And a lot of exchanges are really hard to use with Trust Wallet. But even using MetaMask and stuff, it's very quick, low gas. I love it. And I think that anyone that jumps on to the collective that's never used Switch before, I think they'll find that it's super clean, great UI, a lot of features that they're adding in, and a lot of just very quick, cheap transactions compared to other sites.
Awesome. Now, when it burns, that's getting rid of the total supply completely, right? They're Pickles, right? The trading fees burn?
That's correct. Okay. And so we don't have any minting function. So our billion tokens that are minted on the contract's execution, that's it. That's all that's going to be there. And then, of course, 50 million of those are going to be sent to the burn wallet immediately. So now we have a $950 million circulating supply. And now with every transaction, because of the burn wallet gain reflections, as well as the Switch exchange doing the burns, it's just going to keep going down and down and down. And those burns are going to become faster because as the burn wallet grows, it's going to get more reflections. So that's really the heart of the tokenomics, to create a hyper deflationary token where you don't have to worry about your market share dwindling or anything like that because of a constant supply. You don't have to worry about the team minting tokens out of thin air and gifting it to themselves and selling it on the open market. So that's I will say one major thing that sets us aside from other reflection tokens are that we don't have a team wallet. There was the most famous reflection token of all time, which I think was not a very great project, but it had a lot of holders and it had a lot of money flowing in at its peak. One thing that project did is that I think 10 or 20% of the token supply were given on contract execution to the team that was never had they never had to pay for that on the open market. Then they were paying influencers, or they were selling it on the open market to pay influencers to promote the project. The influencers were then either, if they were paid in that native token, they were dumping it. I just think it's a bad way to do business. It's not fair to holders. So everyone on our team that wants collective tokens are buying it on the open market, just as everyone else. There's going to be no private pre-sale for us, and there's going to be no tokens minted to us. If we want them, which we all do, we're all going to be buying them on the open market and contributing to the buy pressure. And the community is big because we want to become a DAO, and we want to involve the community in every step of the way. And it's not fair to the community if we are given our tokens for free. So now I'm not going to bash projects that do that generally. Most projects do, and I don't have a problem with it. I'm invested in a lot of projects to do that. It's just not our model, and it's not what we're about.
Yeah, that's a very good point there, Pickles. Now, for those that are listening, the question is, because we've seen projects where they commingle the dev wallet, the development wallet, or the treasury wallet. For the team wallet, for those that are listening, like how can you ensure the transparency on that?
Yeah, of course. So, I mean, we're going to release a weekly audit with an Excel spreadsheet with transaction hashes and explaining what everything went to for that. So everyone will be able to follow, everything's on the blockchain, and we'll show that hash. So say we're saying, we want to do a YouTube video with an influencer or something, and the community decides that's something we want to do. When that BNB or BUSD is sent, that's going to be released to the community. Here's the transaction hash. This is what this went to. We're going to account for every transaction hash. It's going to be a lot of work to do that, but we don't care because the treasury wallet's not ours. It's the developer wallet's not ours. The DAO wallet's not ours. It's the community's wallet. It's the pooling of funds together. And that's the entire theme of the collective is we pull these resources together and we put all of our heads together and we decide on the most beneficial ways to use that to bring all of the holders value. That's what we want to do here. It's really weird, and I don't want to get off the topic. I always have this thought of, and I think that there's people that are right now in third world countries, for instance, that could cure cancer or cure heart disease or something like that. Like they're so smart, they have these naturally high IQs, or they would be able to, but they don't have the resources. They never got to get the formal education because of their circumstances. They never got to use a state-of-the-art lab or something like that to do research to cure these diseases. So you have these people that never really had the opportunity because they had the lack of resources. And I think that we have a similar problem in crypto where I think there's a lot of really, really smart people, but they necessarily don't have the resources or the pool and communities to get those ideas into something more tangible. So with our project, I would say these people that might have these ideas bring these to different developers or different projects, and they're wholly ignored because a lot of teams are they have a roadmap set out and they want to do their things their certain way. But the whole point of the collective is that if everyone pulls these resources together and now we are all equal as a community, we can all decide on, hey, so we have this treasury fund with like $3 million in it. What if we take $1 million of that and this is just an example, invest in Ethereum nodes. And now every holder is going to get a pro rata share of the Ethereum that's being farmed from those nodes. And then it's another form of where the treasury now is in Ethereum for that portion, and then making everyone else passive income in the protocol. So it's just an idea, a bit of a way that the treasury is the community's wallet. So everything's going to be accounted for. And really we want the community to come up with ideas on how to use it. And when we become a DAO, it will be everyone coming up with these ideas. We want to get to become a DAO probably by quarter 3 or quarter 4 at the latest. But we want to get this off the ground first. And so I know it's a long-winded answer on transparency, but I think it's just really important to say we're going to be very transparent with weekly audits and hash reports, essentially. And once we become a DAO, the governance of the DAO is going to control everything anyway. And so we're really excited for that, because we think that when we bring together a community of really smart people that maybe have not had the opportunity to share their ideas or not have their ideas taken seriously, that we can get some really good ideas out there, maybe some new innovations that have never been done before. And together as a collective, innovate and do those types of things, develop those types of utilities, or invest in those certain assets that can bring us all back a return.
100%. I think transparency is everything. And as I'm reading through your white paper, it's a couple of things that are very important for you guys that I find is simplicity and transparency. So very important stuff. Now, regarding the DAO there, Pickles, you have 0.5% going to the wallet. What is that will be used for? Is that just based off what the community's opinion or want? But you also mentioned that the treasury side of it too. Now, are they voting for the DAO? The money's inside the DAO wallet, or are they voting for the treasury as well?
Yeah, so we'll kind of look at this as almost two phases, right? So the DAO wallet is going to be important for the first phase, where the treasury, while ultimately we're using community input for everything, at the end of the day, during this first phase before we become a DAO, it's going to be up to the core team on how to use the treasury. And that's why we're not launching as a DAO, because I think it's important first for us to get this off the ground and going. So we want community input. We're going to invite community input on the treasury, and we're going to be very transparent on how it's used. But at the end of the day, it's going to be up to the core team on how that's being spent. The DAO wallet in phase one is going to be really important, because that's going to be the one where it's going to be almost a pilot program for the DAO. So we're going to put some funds aside on the transaction volume, and we're going to start doing initial voting, and we might experiment with different types of voting. There's a lot of different DAO models. And so we haven't chosen what DAO model we want, because we want to experiment with this DAO wallet and see what DAO model works the best, or which one the community likes the most. But this DAO wallet off of the bat is going to be purely community voting on how that's used. And it's going to be like the pilot program or the test program. We're going to figure out what works, what doesn't. So when we become a full DAO, we're going to be able to pick the best model that works for us. And once we get to phase two, the DAO wallet's really probably just going to be merged into the treasury anyway, because they're going to be the same thing. There's really going to be no separate need for those. But it's really the separation of those two wallets is important for phase one, because we want to use that DAO wallet as more of like a pilot test program. Let's see what DAO models we work. Let's see the best voting methods we have. And let's let the community show us that, like, we'll show the community, like, we're being serious about this. Like, this is up to you. Let's see what ideas we can come up with. So that's really what the DAO wallet is for at the beginning. But the treasury, the DAO, the developer wallet, once we become a DAO, all three of those wallets are completely going to be governed by the DAO.
Okay, so ultimately, you guys, the direction of the project will be based off the community's input. Ultimately, that's what you're trying to achieve. Ultimately, correct?
Correct. We want because really the spirit of DeFi is right. It's decentralized finance, and you see a lot of DeFi projects where the only thing decentralized about them is that they're using a decentralized exchange. They still have a core team that's in charge of all of the assets, and the community's not really deciding how it's used. And for us, it's really not decentralization. It's maybe only partially because you have the peer-to-peer transactions on a DEX, but true decentralization is where the community is going to fully decide how the treasury funds are used. And that's our vision here. That's what we really want. Because if we wanted, and I guess I'll tell people this too, is something that I want to be transparent about. if you want a project that you put your money in and you just let it appreciate and you check it from every now and then, and you hope to get a return, this might not be the project for you, and that's fine because there's a lot of different projects out there. We really want a community that wants to be a part of something, that want to give their input, that want to be active in the community. That's the type of holders we want. So some people might not want to do that, and that's fine because some people really want to just let that money work for them, not worry about it. But for us, we want the community to take control of these pooled resources. Because I tell people, if you want money to sit somewhere, then just take it to a stockbroker and use the traditional finance system. But for us, and the reason why we love crypto and DeFi is because we take back control from these big banks. And so we're letting our money work for us. We're letting our money do the returns in ways that we want it to. So it's really important for us every step of the way that the community is involved. And when we become a DAO, it's going to be up to the community with everything that we do.
Yeah, and also it's important to note that in order for it to not consider as a security, it has to be formed exactly the way you're describing, right? It has to be by the community, for the community. There cannot be an entity dictate where the project is going to go. So that's very important for the SEC and the regulations as well. So good job on that, because I know that we had a chat about this, and you also mentioned how important it is that this project is not a security. So very cool on that.
Yeah, and I guess the biggest step too we're taking is not only that, but we're also just not having it based out of the U.S. anymore. So that way the SEC doesn't have jurisdiction generally. Because if it's not in the U.S., then the SEC can call it whatever they want to at that point, but they really don't have any control if no one from the U.S. is on the multi-sig or owning the contract itself. Excuse me. Sorry about that. So, yeah, but no, I agree 100%. It can't be this one entity in charge. When you look at the Howey test, which determines what a security is, it's the fourth prong is, based on the efforts of others or based on the efforts of the entity. And for us, it needs to be, everyone needs to give in their own efforts for the DAO to work. And that's how we'll advance and be a successful project. We will be as successful as the community wants it to be. And I really think that we have a lot of smart people in this space, especially in DeFi. So I think we will be successful.
Awesome. All right. Well, I think we touched on all the wallets there. Very clear. And I love the fact that you guys will have, if you guys look at the white paper, they will list the wallet address on there. For whatever reason, I'm very savvy at looking at wallets as well. But I always love websites who put their wallet, like the dev's wallet or the Reflections wallet on the website, because I think it's very helpful and transparent, especially for the new people that are into the space. So good job with that.
Yeah. And the only reason we don't have them up yet is because, and I also don't think it says coming soon to the staking rewards wallet. That will be, every wallet, the address will be posted in the white paper. We're using ledgers, and we're still setting up the multi-sig. So once that's done, you'll have all the wallet addresses. We just want to make sure we have the multi-sig set up so nothing changes. And that way everything will be just fully transparent. But yeah, there's nothing for us to hide. We want the community to know where everything is and how every dollar is being used for sure.
Awesome. All right. So to recap, guys, this is a reflection token. So pretty much you just hold a token and you get more tokens just based off volume. You don't have to do anything. But on top of that, it's actually really unique is that you can also stake that token and also earn the staking rewards on top of that as well. So you get double dip there. Usually projects will just have staking only, but this here you guys get reflections and staking as well. Now, for those that are listening, Pickles, what if the concern is this? What if they say, well, you're using 20% for your treasury that's earning all the reflections and you're giving it back? Isn't that like almost the same thing as just holding the token itself? What would you say to that?
Can you ask that one more time? I'm sorry. I just want to make sure I have that clear.
Yeah, because right now you are devoting 20% of the supply, right, to the treasury. I mean, to the staking wallet, right?
Yes.
to earn reflections to give back to the stakers, correct?
Yes.
Now, for those that are listening, we have to say the question is, but aren't you taking the reflections off the holders, already? So instead of, let's say if I have 10 tokens, for example, and now you're taking a portion of that 10 tokens from me into your staking wallet to give it back to me in the staking pool. Doesn't that defeat the purpose of, reflections in a way? Or does that get cancel out in a way?
Yeah, so yes and no. So if you're not staking, you're going to get your reflections, right? And I understand that 20% is going to be taking a lot of reflections out. But if that 20% was anywhere else other than the liquidity pool, it would also be sucking in reflections, just maybe in smaller amounts. So then if you decide to stake, which right now the vision for staking would be you put a certain amount of tokens into the staking pool, you're going to still get your reflections that you would normally get for those tokens. But then those additional, that 20%, the reflections that wallet receives, that's going to be also given to people that are staking on a pro rata basis. And so the benefit of staking is you're getting your normal reflections plus the additional staking rewards while locking your tokens up. And that benefits the protocol because when those tokens are locked up, they obviously can't be sold on the open market. The vision for the staking is that you can unstake at any time and that you're just going to pay an exit fee of probably 5 to 10%, which those tokens will then go to everyone else that's staking as well. So the exit fee for staking is going to also go to the stakers. So it's a little bit. If the question is that 20% is going to be taking a lot out of the people that are just holding and not staking, it will be a chunk of rewards that are going to be dedicated to that staking rewards wallet for sure. But that 20% would be getting reflections no matter where they were. So if they weren't, if you have 1% of the circulating supply and that 20% in the staking rewards wallet, say that staking rewards wallet doesn't exist and that 20% tokens were spread out around, other people's wallets or wherever, you're still only getting 1%. You still only have 1% of the circulating supply. So it's not taking any actual reflections from your wallet personally, but I guess it's less overall going to all of the holders. But if you're staking, you're going to get those additional rewards. Does that answer the question, or did I not fully understand the question?
It does, Nicholas, and thanks for that explanation. So it's if you guys buy it, make sure you also stake it. I mean, it's a no-brainer. So get the tokens and also stake it immediately. So you get the reflections and you also get the staking rewards as well.
Yeah, I think it's the best option too, because when you're staking it and we're really hopeful that we get long-term holders in. We want people to jump in now once we launch, but also stay around, get to where we get to the DAO, and we think that that's where we're really going to make a lot of growth. So if you plan on being a long-term holder, the best bet is to stake, I think, and only time will tell. But all the tokens that I buy, which every token that I will get will be bought by me the same way everyone else had to buy their tokens, I'm going to be staking mine. So.
Right, and also it's important to note that this is a deflationary token, so meaning that the total supply would be reduced over time, which of course brings the value to the token itself.
Yeah, there's going to be a lot of whales made early because our initial liquidity pool, if we do our entire $100,000 that we're trying to aim for in the pre-sale, that initial liquidity pool is going to be 87,500 in BNB, and then equal parts collected tokens. So you're looking at an initial liquidity pool of around about 175 actually exactly $175,000. So the tokens are going to be cheap at the beginning, and with the high deflation rate, people that get in early are going to have a very large market share. I think that, the first 300, 400, 500 holders are going to own probably a majority of the market share for sure. So it's definitely a benefit of buying the pre-sale and buying on launch for sure.
All right. Well, now that takes us to let's discuss how much are you raising and how many rounds have you had and where are you at?
So we've done 0 rounds because, like I said, we want every single person to have an equal opportunity of participating in the pre-sale because we need the holders to own the liquidity for this project to work. We were actually offered incubation, so we would just do a full fair launch, no pre-sale, and we'd have a funded liquidity pool by the incubator, but we actually declined that because we thought that the best way to do this is to run a pre-sale and have the holders owning the liquidity and not having a third party. Because if you have a third party owning the liquidity that they can pull at any time, that's a safety aspect, number one, although the people that offered us incubation would not have done that. But number two, it's still centralized, right? So it's just something we weren't interested in. So we're doing one pre-sale, and it's going to be at the end of March. We're actually going to have a date for you guys within probably the next 48 hours. We're going to have the date set for our pre-sale. It's going to be first come, first serve. I'm not even guaranteed a spot in the pre-sale. It's going to be $500 worth of BNB or BUSD. We're doing BUSD for the pre-sale, and I'll say why in a second. $500 worth of BUSD per wallet maximum. And so anyone that participates in the pre-sale, it's going to be on Candlesphere's launchpad. Candlesphere is our one of our big partners. And with that, they're going to take 3% of the launch fee of the funds raised. And that's going to be paying for, they developed the entire contract for us. They're developers I'm really close with. They're United States East Coast guys that wrote our whole contract, tested it, and still working on a little bit of parts as we come near the end. But the contract's pretty much done. It's going to pay for the initial use of their staking farms that we can use there. And it's also going to fund and pay for the use of our NFT battling utility, which will be our first utility right on launch that I can go into in a bit. But so we're going to do that. The goal is to raise $100,000 in BUSD. And we have in our white paper the breakdown of how those funds are going to be used. If we hit 100,000, basically 87,500 will go to the liquidity pool, and 12,500 will go to the treasury, and then out of that, 3,000 will go to Candlesphere as the launch fees, and we'll get the hash, the transaction hash for all of that. And we've already paid for our initial audit of the contract. The contract will be audited before launch, and we're using the same audit firm that it's CoinScope, and Cyberscope is like a subsidiary of CoinScope. Cyberscope is really known in the business. Unicrypt uses them, PinkSale uses them, a bunch of decentralized exchanges use them. I think OneInch uses them. They're a very reputable auditing company. They do KYC. So we're going to use them. The contract will be audited before launch. After the pre-sale, the reason why we're taking the pre-sale in BUSD is we're not going to publicly launch, probably for at least a few days after the pre-sale concludes. And that's just to try to do a little bit of marketing between the pre-sale and the public launch. So we're going to do the pre-sale in BUSD because, as you guys have probably seen, BNB's been a little volatile. And the fear is that if we ran the pre-sale in BNB in 3 days, there's a chance that the price of BNB could go down. And if that happens, then the public launch price would actually be less than the pre-sale price. We don't want that to happen. So we're going to do it in BUSD, and we'll convert that BUSD to BNB right before the public launch. That way we have that dollar amount locked in for the liquidity pool, and we'll have the exact price from the pre-sale. The pre-sale won't be taxed. So you're getting the pre-sale will be if we raise 100,000, it'll be 0.00025 per token. That's USD equivalent. And the public launch will be the same price, except you'll have the buy tax with the public launch. So the benefit of being in with the pre-sale is you're getting in at that launch price. You're not paying the tax. And remember, only one person will actually ever get in at the launch price of 0.00025 during the public launch, because once buys start coming in, that price is going to jump pretty quickly. So this gives everyone an opportunity to get at least part of their bag in at that early price without having to pay a buy tax. It funds our liquidity pool, and then we're ready to roll. So we'll probably take a few days, maybe a week or two max, get some marketing around that, and then get ready to go. On launch, we should have staking ready on Switch. We'll have staking ready on Kenosphere, and we'll also have our first utility, which will be the Kenosphere. We actually might have that even before the public launch, which will be the NFT battling utility. And basically, these guys at Kenosphere, they have this huge platform, and for the starting price is 0.12 BNB for an NFT. But you mint this NFT, it'll have random attributes, and it'll have a base character. We've already developed that. And I think you can go, if you go into our white paper and you see it's this ant, and the reason why is because this is ants have to work together as a community to thrive. A single ant by itself is useless. And not to say that any of you or me or anyone else is useless by themselves, but we're not as powerful. But when we come together as an entire collective, then you can see ants transferring something 5, 6, 7 times the size of them working together. So we thought it was just a good metaphor for what we're trying to build. So we'll get the random attributes, and basically how it works is you pay in BNB to mint the NFT, and then you can challenge across other projects. You can challenge their NFTs in battles, and the winner of the battle will receive BNB rewards as a prize. So it's a way to make BNB prizes. And this is a revenue generating stream for us. So with the BNB that go to mint these NFTs, 25% goes to buyback burns. So it's another deflationary mechanism for us. 25% to the treasury, 25% goes to fund the Kenosphere's reward system for these NFT fights. And then we're going to be the only project that's not doing this way, but Kenosphere gives 25% to the team behind the whatever project is, and we don't think that that's fair. So we're going to take that 25% that would go to the team. A small percent of that's going to be a royalty to our artist, our NFT artist. That's how he's going to be getting paid. But the majority of it's just going to go back into the treasury, because we're not going to be taking any BNB from this, the team. We want that money to go back into the pool of resources. That way the community can use it.
I see. Yeah, so Kenosphere, I think we had the owner of the project here for the AMA. I think he has a couple projects. But anyway, that's a great idea. So did you have another way to reduce the total supply here through your NFT? Now, what is the total amount of the NFT there that you guys will be having there, Pickles?
So we haven't decided on the total amount yet. The thing about, we might do unlimited, because the thing is every 10 NFTs that are minted, the price will go up slightly. So you want to get in the NFTs early so you can get it at the lowest price. And we're looking at ways to do governance through NFTs as well. We're going to have NFTs as representative of each phase of the project. If you look at like the phases in our roadmap, which will be used for other things. And so they might have NFT limits, but for this initial one, because it's just pure revenue generation and it's for the battling and we want people to participate, I don't think we're going to limit the amount of NFTs for that. When we do other NFTs in the future for other utilities, those are going to have limits most likely. But with this one, the benefit of getting your NFT as fast as possible is because the price goes up slightly after. It's every 10 or 20. sold, it will go up a little bit in price. So you want to get in at that early price point if you want to do that. And you can, it's like having your own little Pokemon almost. You can train it to increase its attributes. You can battle it to increase its attributes, and you can win BNB prizes. So it's a fun game. It's a way everyone can make some money, support the project, and just have some fun. Crypto's fun. It should be fun. We have an NFT with a machine gun on the back. Like, it's not serious, right? And crypto's not like that. That's part of the thing with crypto is like, it is serious because we have real world money here, but part of it is let's just have fun. I see you guys in the chats talking, and I'm sorry if I'm saying guys the non-gender neutral to anyone. I don't mean any offense by that. Just for where I'm from, it's a typical pronoun to use to describe everyone. So I don't mean any offense by that. But it's a way for us to have fun and, talk a little bit of smack in the chat. I'm going to call out Seattle, and I'm going to beat his NFT when he decides to mint his. So I want to beat him and brag about it in the chat afterwards. So it's just a fun way to do that.
That's the challenge there. Taking that as a threat. So I'm on. All right. Well, I want to go back to the pre-sale. One thing that actually really it stands out for me is that you mentioned that you guys are raising 100,000. I guess that's the hard cap you're trying to achieve. But if you reach that amount, you are putting 87,500 into the pool, which is 87.5%. That's a lot. That's a lot compared to a lot of projects out there, which is great. Now, the question is, now I know that you said 12,000, something like 12,500 go to the treasury. Where will be the funds for the marketing? How's that being funded right now? How's the project being funded right now?
I've been paying everything out of pocket. So that's how everything's been funded. And there'll be a few things that are going to be reimbursed, which we already have in a chart. But it's not much. It's probably about $3,000 of total things that we have a YouTuber that's doing a video, the contract audit, the two AMAs that we've done. That's it. All the other things that I paid for out of pocket, I'm not reimbursing myself for. So all the other costs. But I will say a lot of the stuff we've done have just been people that are community members want to help. Our website guy, Flux, he's now part of the core team. But at the beginning, he just was like, hey, I think this is a good project when I first was talking about it. And he is like, I could do website development. And he just developed our website. And we were like, he's so excited. And we just like, he's part of our core team. Like he really just, and that's kind of how we built it. Like the guy who made the NFTs, Triton, he hasn't been paid for anything. He just wanted to contribute to this community. So we already have people, really talented people in our community that have just been coming together and doing things. And it's been awesome. So that initial 12,500, we're going to use that for additional marketing. We're also very fortunate with Switch. So because Switch is, Titano is migrating to the Switch token, and the Switch decentralized exchange is going to be having the perpetual DEX features, a 1% launchpad, which is unheard of, and a few other really good things like with their staking and stuff. They're doing, they have a marketing firm that they're using, and they also have $7 million in a war chest that they're using right now. They're going to be doing a lot of AMAs and stuff in the future. So why I say that's important is because a lot of people are going to be coming to the Switch exchange. And when they go on the Switch exchange and you click down on the drop down to see what tokens, this isn't like Pancake Swap where you kind of have to know the token you want going in. You need to copy and paste the contract address in, and that's how you do the transaction. When people come to Switch and there's a drop down menu of tokens you want to trade, there's only going to be like 5, 6, 7 tokens on there for some time. And so our token's going to be on there. So when people are coming to Switch to use, because all this marketing that they're pushing out to transact on the Switch exchange, they're going to see this token. And it's going to be another really good source of marketing that we're going to piggyback. So they're about to start their marketing blitz in the next 2 weeks, and we hope to capitalize on that and we'll probably be the second or third token other than their token launched on there. So we're really excited about that. But we also, we'll get additional treasury funds from transaction volume, and we're going to talk to the community, and we want the community to, if they know some influencers or have some innovative marketing ideas or anything like that, we're all open ears. Like, we want the community to be involved in this. So let's figure it out. Let's have the conversations. It's funny. We had one guy message me about, he's like, hey, I want to talk, like, what are you doing for education? And I was like, what do you mean? He's like, we got to, like, too many people are getting scammed. We need to teach people about blockchain and stuff. And I was like, yeah, you're right. I was like, so I created we were like, let's create a channel or a thread in our Discord about education, and you're in charge of it now. And that's what we did. So, we want people to bring these types of ideas and stuff for the marketing, and that way we can you feel more included and feel more a part of the collective. So that's what we're going to use for that. And yeah, 87.5% is a lot that's going to the liquidity pool. But the reason why that's so high is because we're not using the treasury to pay ourselves, as a lot of projects do. We're using the treasury for this project. We want this project to succeed. And I know a lot of people will think that sounds too good to be true, but I'm going to invest a lot of my money into this project when it launches. And so if my efforts succeed, my payoff there is the appreciation in price of my token. My payback will be a community working really hard together that comes up with an amazing idea for other revenues of passive income. So that's kind of the way I look at it and what I want out of this. And so it's kind of how the idea was born.
Yeah, I mean, if you analyze the structure of the tokenomics, I mean, there's no doubt that you really want to see the project succeed. 87.5% to liquidity is pretty much raising the money for liquidity, pretty much. And 100 grand is actually very reasonable. So good job on that, man. So, and as long as you guys keep the wallets transparent, I think it would do well. I think it's going to do very well.
Thank you. Yeah, a lot of crypto projects fail, and it's not necessarily because they have a bad team. There's a lot of rug pulls and fraud in this space, so I'm not going to be naive about that. But there's a lot of external factors. I think a lot of projects that launched in early 2022 got wrecked because of the bear market and all the black swan events we had. So we're not naive to the fact that it's hard to launch a crypto project that becomes successful, but we think we're up for the challenge. So we're going to try our hardest. If this project fails, it's not going to be because of fraud or a lack of effort on the team's part. We're going to do everything we can to make this successful.
Well, the tokenomics is there, right? And you guys approaching this with the best intentions all around. Now, that leads to the next questions. I know that you have the treasury and you have the DAO, and those will be dictated by the community of what directions you're going to use those funds for. You also mentioned that investment is part of the program. Is that what it is there, Nicholas? Now, if it is, now how would that benefit the whole ecosystem or just a token in general?
So are you saying, like, if the community decided to invest the treasury in something, how would that investment benefit the community?
Yeah, so I guess the question is, would you guys be working towards a additional revenue stream outside of the ecosystem, through those funds from the treasury and the DAO? And if you guys are, how would that benefit the holders?
Of course, yes. So definitely going to work towards more revenue streams, and all revenue streams are going to go back to the holders. So that's the whole point of us trying to come up with revenue streams, is to then give that back to the holders. So that way the holders are getting revenue. Now, we might have it where a portion of the revenue goes back to the treasury, and that's just for the simple reason as long as the treasury is there, then, and we put some more money back into the treasury, then we have more assets or resources to pursue other utilities or revenue streams. But majority of the revenue streams are going to go back to the holders for sure. That's the priority. So if say the revenue stream, we're getting revenue in BNB, maybe we could use that as a buyback, burn, or a buyback, and then send all of those collected tokens to the reflection pool, and then have all of those tokens distributed to all the holders. That's something we could do. There's a lot of different ways. So people could get just those tokens generally distributed to them, or they could decide, hey, how about we try to make some price appreciation with collective tokens with these revenue streams, and then send those collective tokens from the buyback either to the burn wallet or to the reflection wallet. That way all those collected tokens are dropped back pro rata to the holders. And that's probably the easiest way to do that. But yeah, that's definitely something we want to do.
Awesome. Thanks for that clarification there. Now, when are you expecting the launch to be, Pickles?
So we'll have a pre-sale date aiming for the end of March. And we are expecting the public launch to be either at the end of March or early April, within the first week or two of April at the latest. We want to get those dates kind of set in stone sooner than later, so that way everyone knows they can have their funds ready if they want to be in the pre-sale, and we can start marketing around those dates. We were going to launch a little bit back a couple months ago, but and Seattle and Mike and a few others know about this, when just some regulatory issues with the SEC, and which is why we had to make some changes. Mainly the change was just getting the project outside of the U.S. But other than that, we're ready. The contract's ready. The audit's paid for and ready to go. We're just going to make sure that there's no other changes we need to make to the contract before we get it audited. And but there's not much left to do. We're ready to go. The art for the NFTs are done. Both partners are ready to roll. So we're really excited, and it's something that can happen very soon.
Yeah, you being an attorney in launching a project, and I see the level of seriousness that you take in this project. You push it back, and you look into ways to make sure that you guys are in line with the regulations, right? That's actually awesome, because I've done a lot of AMAs with projects in the United States, and I've seen a lot of projects, and there's no thoughts to that side of it. And I think it's important that, project owner is mindful about that. But also it tells me that how serious you are with your project. So great job on that there.
Thank you. Yeah, I think it's important for two reasons too, with regulatory issues. So you have the selfish reason, and then you have the noble reason. The selfish reason is I don't want the SEC kicking down my doors. And saying that I have an unregulated security or unregistered security, and that I need to pay $1 million fine or go to jail or something. They're not a criminal; they can't prosecute me. But I don't need to get into the weeds of that. The noble reason is, if that ended up happening, though, it would also, for intent and purposes, shut down most of the project and cause the project to liquidate, and it would harm all of the investors. So the SEC, thinking that they're doing something to protect investors, would actually harm every single person that invested in the project. Majority of those people probably outside of the United States, they get no benefit from SEC protection to begin with. So it's just not it's not a risk we were willing to take. And so, yeah, it just took additional time to mitigate that risk, to not even say, hey, if the SEC came knocking, we can show them we're not a security, to make this so they can't even come knocking because they don't have jurisdiction over this project whatsoever.
Very important. As we know, being United States, they have been cracking down on a lot of projects. I guess that's operating illegally in their terms. So yeah, man, I appreciate the extra measure that you're going through to ensure that the project is within the regulation. So that's really good to see, because I've seen a lot of projects coming through, and they say the registered entity, that doesn't do anything really. It's just a business license, so it doesn't do anything. So, but yeah, great job on that there.
Thank you.
All right, so I think we pretty much covered everything there. Did we miss anything, Pickless?
No, I think we hit pretty much everything I can think of. So, yeah, if people have any more questions, though, please, we have a Telegram. It's not as active because we just recently made that. And we have our Discord as well. Please come on over and we can, that's where you can step today for all the announcements and everything like that. And I hope that there's anything that wasn't answered. I mean, you guys saw me talking with some people. I know I was talking to Cali Girl and a few others earlier, and I will not shy away from any question. And that's part of the transparency aspect. If somebody bans you or blocks you or gets hyper aggressive over a question, then that's a red flag. Because if someone wants to put their money into something, they have the right, in my opinion, to ask any question. There shouldn't be anything off limits.
100%. That's how we like to operate as well in a group. We do not ban people. We do not filter anything really. So we promote, openness, right? And I think sometimes getting those hard questions is actually very crucial, even for project owners, because then you see a different side of perspective, right? Different perspective of the projects. So it's good. So keep those questions coming. So with that said, Mike has been keep tracking a lot of questions in the room. And he's going to come on and ask a few questions away.
Of course.
All right. Thank you, Seattle. Thank you, Pickless. That was an amazing presentation. I'm coming in on my alt here just so I can keep up the PC here. But if anybody wants to ask any question on voice, please feel free to open up your mic and do so. We open up the mic to every person here. I'm going to ask a couple of text questions here. We're going to start off with Michael Bonds. His first question, Pickless, is according to the NFT battling, will there be any sort of leaderboard or dashboard where the stats of the opponent's NFT or your NFT will be displayed in order to know the quality and or toughness of the NFT? Also, will I stand to lose anything if my NFT is defeated?
I love that question. I love that idea. I don't think they currently have that. I will talk to Crypto Rick and Orion actually today and suggest that. I wouldn't be surprised if that's something that's already in the works. I know that you can view everyone's NFT, but I don't know if it's necessarily in a leaderboard. So I know you can view all the NFTs minted and it'll have their wins and losses. That's already part of their platform. But for a leaderboard, I think that's a great idea because they are doing a fight club and maybe looking at like a battle royale mode too. So I'm sure that there has to be some type of leaderboard aspect. To lose, I do believe there's a very small fee to do a fight. I don't think it's much. Because I know that there's some gas involved, but so yes, you could lose a little bit, but the reward isn't just based on that. So if you're winning, if you're going 50-50 on your fights, you're going to be up ahead for sure. Another thing is that they're going to be doing a part of their fight club is where someone can challenge another person specifically, and you can decide on a wager amount for your NFTs to fight. And so at that point in time, you're gambling or wagering, and so obviously whatever you decide to wager, you would lose. But that's not necessarily necessary for the general NFT battling, but that will be one thing that they're working on and releasing that people can do, just an option that you can have. Also, your project might be defending, and you would have no say in that. And if you lost, you don't lose anything. But if you win, you would win as a defender, and someone chose to attack you and pay the attack fee. You win by doing nothing, being a defender, and you win your prizes from that. So that's another cool thing that they do.
Awesome. Appreciate that, Pickless. So when you're betting or putting up money, essentially to do this NFT battle, will it be in the native token? Will it be in BUSD, DNB?
Everything's in BNB, and so then that BNB will be divvied up. You'll be doing it through, if you're using the collected NFT, then all of the BNB that goes to Kennelsphere for, whatever, either minting the NFT or doing the attack or anything like that, then that gets divvied back, and that goes straight back to the collective and split the 4 ways that I mentioned earlier. But it will be in BNB.
BNB, okay, appreciate that. Next question going in from Michael Bonds here is talking about the unstaking fee between 5 and 10%, which will be distributed to stakers. My question is, how will it be shared? Will it be going to equally shared among all stakers, or it will be shared according to your bag size and stake size?
It'll be according to your stake size. So, yeah, if you're staking 1,000 tokens and someone's staking 100 tokens, the person staking 1,000 tokens will get 10 times more just by virtue of their staking more. And so, yeah, it'll be a pro rata.
Okay, perfect. Next question rolling in from Mishu here, Nicholas. First question out of 4 is, do you ever see the project removing this?
I think I lost you, Mike. I'm not sure if anyone else can hear Mike, but I cannot.
Yeah, I think we lost him there. Mike, you there, brother? So why am I? There he is.
He lost me there. I don't know what is going on with my connection. I apologize for this. Can you guys hear me all right? I'm back on the PC now.
Yeah, I can hear you now.
Okay, I'm sorry about that. So Mishu has this question is, do you ever see yourselves removing the sale tax in the future if your project exceeds your expectations?
It's possible. That would be up to the DAO, though. So if the DAO decides that they want to remove the sale taxes, then we can do that. If removing the sale tax then probably would end the reflection system. So if it gets to a point where the product's big and we don't think reflections are necessary, but once again, that'll be completely up to the community. So of course, if the community decided that's something they want to do, then definitely, because it wouldn't be up to me, it would be up to the DAO.
Perfect. Makes sense there. I'm going to keep switching back and forth here to make sure I don't have any hiccups. So next question from Mishu here is on fair launches. It's been very popular lately. Is there any reason you're not going through a fair launch and sticking with your current launch, your pre-sale rather?
So part of the deal, first and foremost, Switch Launchpad's not ready yet. So we have to wait on that. Number one. Number two, Kennelsphere, where they developed our contract for us, for me, when I was talking to them for the collective. So part of our deal is we're going to use their Launchpad since they did a lot of work and really got us to where we're at right now. To do a fair launch without a pre-sale, we would need funds to do the liquidity pool, and we just don't have $100,000 to put into a liquidity pool of our own money right now. So that's pretty much why we're doing a pre-sale instead of just doing a fair launch without a pre-sale. So we're using Switch because from the reasons at the beginning why Switch is just really beneficial, and I am part of the Switch team, not the core team or anything like that, but I do work with them. I do a lot of moderation and communication work with them.
Awesome. Actually, speaking on the Switch there, Switch Finance and the Collective share development team members, do they? Or are they completely separate project? And is there any plans for Switch to provide liquidity like they have done with another project?
So number one, completely separate. So I know all the developers for Switch. They're amazing. And they are so busy with Switch and everything else, they would not have had time to contribute at all to the collective. It was completely externally developed. And no one from the core team of Switch is on the core team of the collective. Although some of us work with Switch, we're not part of the core team or the development team for there. So completely separate. But I love those guys. They're some of the best developers I've ever seen. That was number one. Number two was about incubation. So incubation was offered, but we turned that down because we thought that the best way to do it, because we don't want a third party holding our liquidity. We think that the community itself needs to hold the liquidity, and the DAO will need to hold the liquidity. So if someone funds the initial liquidity pool and they own the liquidity, then the DAO won't be in charge of the liquidity pool. So it's just as simple as that.
Perfect. Appreciate that pick. This next one is coming in from, I hope I say this right, Psyche. Do you have any educational methods such as tutorial, Medium articles, YouTube content, so that the information about the collective that is provided is really able to be taught to any new people coming into cryptocurrency as a whole?
So yeah, we're going to have some very simple videos. We'll have links on how to use Switch. We'll have some simple videos of how the flow of money works with the collective, different things, ways to avoid scams. And I didn't hear the name of the person, but if you have a Discord, and you're interested in this project, I would love you to come on over. We have the education thread there, and please give us any ideas, input you have, and we can make you as part of the education team. If you have good ideas and want to be a part of this, and we'd love to have that because we think education is very important. So anyone that has any types of education ideas, jump in. We want to hear them.
Perfect. If you're listening there, Siki, I hope I said that right. Head on over to Discord. You have a lot of educational aspects over there for you. Next question coming in from the same person is, I'm curious about the collective roadmap. Is updated until April 2023, according to your docs. So does this mean that it's currently in a phase where the complete mission and vision of the ecosystem is being filled, or will we have more updates on the roadmap soon?
Love that question. So we'll definitely have some updates for some things, but the biggest thing is we want the community to decide on things before we start funding them with community funds, because the treasury are community funds. So we don't think it's fair for us to put together a roadmap out for an entire year and have all of these things that we say we're going to accomplish, and we're going to use your funds to accomplish them without you having any input in that. So we really want the community to come together first. We run ideas by them. We get some voting done, some input, some feedback before we decide to earmark any type of community funds for that initiative. So for us, it's really important to have the community together and ready to roll before we start earmarking more funds for more utilities that the community didn't get a chance to provide their input on.
100%. Appreciate that. Next question is also rolling in from Psyche here. How will, and I know you spoke this on a little bit earlier, how will the partnerships help the collective growth and vision? And how do you feel about the collaboration of good partners to develop the ecosystem in SEX and DEX listings? And can you speak on other partnerships you're also trying to onboard in the future?
Yeah, so I don't think we're really going to be looking for any SEX listings for a while. The reflection model doesn't work very well with that. And once you're on a centralized exchange, you lose that decentralized aspect because they take a lot of control. And it really is hard to be a true DAO on a SEX. But once again, it'll be up to the DAO on that part. Yeah, good partners are everything. Switch, I know everyone there, and they're top of notch. And Kennelsphere are also some of the most talented, smart guys I've ever dealt with. So both of those two partners, I have no doubts about at all. Additional partners, we're open to anything. We would love great partners, people where we can bring value to them and they bring value to us, because that's the way a true partnership works. It can't be one-sided, or it's not going to work out in the long run. So if you have an idea, if you know a project, if you know someone and you think that there's a good way that we can bring value to each other, then come into the Discord or the Telegram and let's hear about it. And we would love to do that and talk to everyone in the community about it, get some feedback. And if it's something that everyone feels strongly about, or, even a few people feel strongly about it, we'll go for it.
Well said. I have to second that notion there. Strong strategic partnerships in the space today could very much help the value of a project. 100%. Okay, let's see. Random guy is coming in with the next question. So how does the reflection protocol work? Does it distribute reflection on an hourly basis, or is it every transaction made? Can you go a little more into detail on this?
So it can do either or. Right now, we are experimenting on testnet to approximate gas costs, because buying a smart chain is very cheap. So you could do with every transaction, but it just really depends on if there's a more than marginal difference to do it, say, every hour or every 2 or 3 hours, instead of doing it immediately. With the reflections, then we'll probably go that route, but we will have that information updated. A lot of reflection tokens actually do it immediately, and that's my preference. But it costs gas, so we just want to make sure that it's not a more than marginal difference in gas costs first, because if it's cheaper to do it, significantly cheaper to do it every hour or every 4 hours or something, it's probably in the best interest of everyone to do it that way, because it would just save gas costs for everyone.
100%. And I can imagine, if you're paying out to 100,000 holders, if you're doing it every hour, that gas is going to be tremendous. So totally understandable. Let's see what we got. I know we talked on this earlier, but Gemini has a question about security. You said you're going to have your audits complete by launch, or will this be post-launch?
Audit will be done before launch for sure. I wouldn't expect anyone to want to buy into a project. Maybe not before the pre-sale, but I'm actually going to try to do it before the pre-sale. The audit's already been paid for, so it's not like we need to raise money to fund the audit. It's more just when I get them the contract that they have time to get done for the pre-sale. Before public launch, for sure. I think it would be really irresponsible to launch a project without an audit, generally, because just for safety and generally. I really trust the developers, but it doesn't matter. There could still be a bug in the audit that the audit finds that they don't know about, so it's always important. Before public launch, the audit will be done, for sure, and publicly released.
Thank you for that. Yeah, 100%. A lot of the investors today it's been a volatile market for most of the year here, and it's still kind of, trying to figure out which way she's going to go, honestly. Any sort of security issues you can get out of the way before launch will definitely increase any sort of trust, I could say, in the community as best as possible anyways. Okay, let's see. Next question is there any sort of minimum or maximum amount of tokens you could stake at one time or in one wallet?
No, no minimum or maximum. If a lot more people are staking, generally the additional rewards will be less. If the community but the whole community gets benefit from that because that's less sell pressure. Also, if you have a lot of people staking, that's going to be a lot of people that eventually have to unstake. And when they unstake, that's more fees that get spread out. So I think in the short term, when there's a lot of people staking, you're going to see less additional rewards. But in the long term, I think it will be evened out because you're going to have all of those tokens eventually will have to be unstaked. They will pay an unstaking fee that will go towards everyone else's staking rewards. So if you aggregate it out over a long period of time, it'll probably be even.
Right, 100%. Next question is about your tokenomics, and I know we spoke on this very early, but can you break down the taxes and where they'll be going to between a sell and buy, as it doesn't seem to be anything going to liquidity?
Yeah, so if you look at the, if anyone goes onto the white paper and goes into tokenomics and then go to buy taxes or sell taxes, so you'll see how it works. So if we have a breakdown of the flow of the money, so for instance, $100 buy, $95.50 of that BNB will go into the Switch liquidity pool, and then $93 of collected tokens will come out of the liquidity pool and go to the holder wallet. $2.50 will go out of the liquidity pool of the collected tokens to the reflections. So now you have even in, even out of the liquidity pool, which always has to, for a liquidity pool to function, it has to be that way. Then out of the holder wallet, $3 of the BNB will go to the treasury, $1 of the BNB to the developer wallet, 50 cents of the BNB will go to the DAO wallet. And we have a little chart that shows the entire flow right there. And then for the sales, it's essentially the same in reverse, except it'll be a little bit more going to the reflections than from a buy. So, but yeah, we have it on the website as well. So if you go on our website and you scroll down, you can see these charts. It's actually probably the second part of the site right there. You'll see that we have the money flowing in and out of the liquidity pool and the wallets and how it works.
Perfect. All right, I'm going over to Twitter now. Check out some of the questions here. We have next one coming in from Ravier. Hope I said that right. It's talking about the game and the NFTs for your ecosystem there. So obviously you use your NFT to battle. Do you also need to hold the token or just an NFT to be able to battle? And is there any sort of, like some of these games have pay to play in a sense, where pay to get ahead or have some sort of advantage? Will it be anything like that?
So yes, you'll currently, and this is subject to change, they'll have to have $50 worth of collected tokens in their wallet to participate in the NFT game. We might change that to a token amount instead of a USD amount, just because USD prices can be volatile. We'll see. That's something we'll run by the community. You can pay to train the NFT, but the base stats and pretty much it's a lot more luck of the draw. If someone's paying a lot of money to train up their NFT, the amount that they're going to pay versus the rewards they're going to get, the rewards are not going to outperform the amount they're paying. So while it might have some pay-to-play aspects, it's not. The pay-to-play aspect is not going to. It's not going to be like Clash of Clans, if anyone knows that game. It's not going to be a mobile freemium game where if you put in thousands of dollars, you're going to be the best. It won't work like that at all.
Okay, perfect. Let me try to find one more question here. I know we're coming up to 2 hours. Of course, I always like to tell everybody here, if there's any questions I've missed or you still like to ask, always head on over to the Telegram, the collective. Pickles here and the team will be always happy to answer any questions. Let's see. Last one I'm going to take from Ryan here over on Telegram is you have a sell tax that's 12%. So my question is, why is the sell tax so high? And do you have any plans to decrease the taxes in the future or possibly go the other way, increase more?
So the sell tax will never, both the sell tax and the buy tax will be capped at 12% and 7%. The sell tax after the cool down. If you go on the white paper, you'll see the first day is a 33% sell tax, which is extremely high. And I know that a lot of people don't like that number. That's just so we don't have people dumping on day one. That'll go down by 1% a day until it gets to 12%. Once it's at 12% in the contract, we'll have it, and this will be shown in the audit. It can never go above 12%. The reason that's so high is because all of the additional 5% between the buy tax and the sell tax, that's all going to reflections. So that extra 5% is just a redistribution of tokens to other holders. And it's also a way that if a whale decides to dump, it's going to still, holders are still going to get some benefit from the whale dump. Lowering the taxes, sure, definitely could happen. By that time, I'm sure it's going to be up to the DAO and not up to me. So if the DAO decides to lower the taxes, they most certainly can.
Perfect. One of the questions I actually wanted to ask myself, I know we went through all the taxes, but is there a transfer tax?
No, because since this is reflections, if you have 50 tokens and you have 50 tokens in one wallet versus 25 tokens in one wallet and 25 tokens in one wallet, you're going to get the same amount of reflections combined, so it doesn't matter. And because there's not a minimum or a maximum sell amount, so some tokens you can only, if you have a certain amount of tokens, you can only sell 1% a day. Or if you have less tokens, maybe you can do 5%. So if you had your tokens all split up between wallets, it would be beneficial. But since we don't have any of those types of features, if you want to split up your wallets, it doesn't affect anyone else in a negative way. So there'll be no transfer tax, just whatever gas you have to pay, which would probably be a couple pennies.
Yep, on the BNB network there. So just transfer tax is the cost of the transfer, transaction tax with no extra fees. Perfect. One last question I'm going to ask you here from Ryan here is about your community. You opened your TG community on the 16th of February, and you have a very small number of members in your community. So what is the plans to increase your community members on Telegram, and do you have a bigger following on Discord?
So yeah, we opened that up, but we didn't actually announce that Telegram until a few days ago. So yes, we're going to be working on that. The thing about Telegram is it's not as secure as Discord. And so when it goes to the DAO and voting and stuff, a lot of that's going to have to be done on Discord because it's more secure, a way of doing things. We initially started, we weren't going to do a Telegram, but I thought after thinking that over, I didn't think it was a good decision because I thought that we'd be missing out on a lot of people that like Telegram and prefer Telegram. So we're going to be working on building that Telegram up for sure. But although that Telegram is getting close to a month old, it hasn't actually been publicly released more than a week. So everyone in there has just been organic people. Our Discord has 3,000 people. And they're all real people, but a lot of those people came in from it's called this Quest. It's like a marketing thing you can do to where people have to do certain tasks to win crypto prizes. So a lot of people that came over from the Discord probably aren't going to be investors, which is unfortunate. But that's fine. A lot of the people in the Discord will be investors. So we're working on getting more and more people in both of those communities. And if you have any ideas that you think would be beneficial, please let me know.
Will do, 100%. Appreciate that. And I actually agree. I do love Telegram. I do. But Discord is very organized and it's been out for a very long time. And that's something I've always used over the past few years as it's been out for a long time. I just really hope that Telegram kind of kicks up their, what's the word I'm looking for? The standards, I guess you could say, as I'm always having some sort of issue. But I've never had one on Discord,
Yeah, Telegram is very scammer friendly, but it's also very user friendly. So I like Telegram. I think there's a lot of, we don't want to close that door. But at the same time, when you're in a DAO, you have to associate your wallet or username with a wallet to vote a lot of the times. And there's no way we could do that on Telegram. That would have to be done on Discord. So that's just one big reason why. But we're definitely we want more people in both of those for sure. That's definitely one of our goals.
100%. All right, well, Pickles, I appreciate you answering all of the questions. If there's nothing else in the community that wants to hop on and ask a question real quick on voice, I'm going to kick it back to Seattle. And thank you very much, Pickles.
Thank you.
All right. Appreciate that, Mike. Thanks, guys, for the questions there. Very well articulated yourself there, Pickles. I do have an idea to increase the number in TG here. So we're going to send, Johnny's going to post a link on the TG. If you guys can go over there and drop a USA sticker. Mike is going to go over there and he's going to pick like a $10 winner. Is it 10 or 15, Mike?
$10.
$10. Oh, plus with that said, we do have some tokens to give away too, right, Pickless?
Yes. So, Mike, if you want to pick 8 more winners, and we'll do, or you can do 8 or you can do 4. We can do $20, but whatever number you want, pick some more winners, and we'll do when the pre-sale funds are distributed. We'll make sure that we airdrop those collective tokens to those winners as well.
Yeah, 100%. I think we'll probably do 4 at 20. Do a nice even round, good number there for everybody to have a little bit of backing there. So we'll do 4. We'll do 4 winners there.
Perfect.
Hey guys, so if you guys look at that the pin post there, Johnny just posted that pin. Join the group and drop a USA sticker, and Mike's gonna go there and pick a $10 winner, and he's gonna decide how that $80 is gonna be distributed here. Are we doing drawing, Mike? Is that what we're doing?
Oh yeah, I collected all the names and I have my share screen on the PC ready to go, brother.
Oh man, it still amazes me how you are able to collect all those names still now. Nicholas, it was a pleasure having you here, brother. I think you articulated yourself in the project very well. To recap, the project's a reflection token. All you gotta do is just buy the token, hold it, and you get reflections of the native token to your wallet without doing anything, proportionate to your holding, the amount of tokens you hold. On top of that, you can also stake those tokens. At the same time, we have reflection, but you also can earn staking rewards as well. Ultimately, the project is aiming for the DAO, which ultimately will be the directions, dictate the direction of the project. Anything else I'm missing that? You guys are getting KYC, right, Pickles, and also the audit would be done before the pre-sale?
Yeah, so we have if we KYC, if the community is wants that, we're the multi-stakeholders are going to KYC. I'm not going to KYC. I had actually KYC'd, but now that I'm not going to be on the multi-sig, we don't want anybody in the U.S. to be KYC'd on the multi-sig or owning the contract. That way, the SEC has no jurisdiction. The people that are on the multi-sig that are going to have ownership of the contract, the other parts of the core team that are all outside the United States, we are willing to KYC. We just haven't done the process with them yet. But if it's important to the community, we'll do that.
So now your NFT will be live at launch. You say you're staking as well, correct?
Staking most likely, NFT definitely will. Also, our team is doxed to the Switch, to the exchange. So most of our team is, 4/5 of our team are doxed fully to the Switch exchange. And so that's another method of security. It's not like an official KYC company. The exchange that we're listing on, we are doxed with too.
All right, thanks for the info. Okay, well, if you don't have a last word for us, Pickles, Mike is going to go ahead and do the drawing.
Let's do the drawing, and I'm ready for it. Thank you so much.
Thank you, Pickles. Okay, here we go, guys. We have $20 we're going to give away today on one random wheel spin for all the attendees that I've written down all the names for. We're also going to come back, and I'm going to go through all the questions, pick what I feel was the best question asked tonight, award that also $20 worth of collective tokens. And we will be following up also, and I will get this over to you as soon as possible, Pickles, the YouTube upload link of our AMA today, where there'll be an additional way to earn additional $20 worth of collective tokens throughout all these things. So with that being said, I'm going to give this a shuffle up. And let's see who we got.
Let's go.
Let's get it. Venosi. Congratulations. Win yourself $20 worth of collective tokens. Okay. Yeah. Switch over back here. that is it for the wheel tonight, guys. Like I said, we're going to be coming over to Collective Telegram shortly. I'll give you guys probably about 20 minutes while I get everything set up. I'll come over there, pick an additional $10 winner, and we'll have everything posted up very shortly, and I'll have everything sent over to you, Pickles, ASAP. Thank you so much for coming in tonight. Very well articulated. Good project here, and it's definitely showing how determined and integrated into this project that you've been, and I'm looking forward to the future of it.
Thank you so much, and just remember the winners of the collective tokens. Anyone that does win, you'll be getting that after the pre-sale for sure. Thank you guys, everyone. Great questions. This is a great community. We're also, if you're ever on our Discord or our Telegram and you want to shill USA Crypto, feel free. We are not going to stop you. We love USA Crypto. We love you guys. Thank you so much, and you guys have a great night.
All right, thanks, guys. Thanks, everyone, for being here. Have a good night, Picklist. We'll see you soon.
Take care, USA. Good seeing you all as always, and we will see you on the next one. Peace!